we're going to see the CPI probably continue to decline for a couple of months before we get a rebound. But, you know, there's a few things we should say about the jobs report. There's no question, but assuming we trust the numbers, there's no question that that was a strong report. But I would put in a few caveats. One is that January is always, December, January, they always have large seasonal adjustments. We've had, that's number one. Also, this year, there was a new, what they call a population adjustment, which would make the numbers higher. More significantly, I think, the ADP report, which is a private company, is showing far, far lower jobs growth than is the Bureau of Labor Statistics payrolls report. So there's a dichotomy, there's a discrepancy somewhere. We don't quite know where it is, but there's a discrepancy between the two reports. Now, one thing, and all of these are minor adjustments, but they all can add up. One thing, definitely, is that a lot of people are holding down two jobs now. Because, you know, they used to have a decent middle management job, they got laid off, they're now driving Uber or something, but maybe they've got two jobs. One's in a restaurant, one's, you know, somewhere else. And that's counting as two jobs on the payrolls report. So that's exaggerating the numbers. So there's all these little things that are going on, I think, with the jobs report. But the biggest two factors, frankly, are that the ADP report is showing one number, whereas the government is showing another number. There's a discrepancy somewhere that we'll have to resolve at some point. And the second thing, that's the most critical thing of all, contrary to what Janet Yellen was saying yesterday, the unemployment rate is always at its lowest immediately before a recession. That's normal. That's normal. We can go back for 30 years and see that. So I don't think having low unemployment means we're not going to have a recession. I don't pretend to be a labor economist or a labor specialist, but there's definitely several things going on. When you had COVID and the lockdown, when people were locked down or let's say restricted for almost 2 years, a lot of people who maybe are 60, 61, 63, thinking about retirement at some point, let's face it, that was a good opportunity to say, you know what, I don't think I'll go back. So there's no question that there's a lot of people who have taken earlier retirement than they otherwise would have done. There's also the factor you mentioned, a lot of people, even people who are employed, and you see that in Manhattan with the banks, even people who are employed do not want to go back to the office. You know, they've got used to, over a reasonably long period of time, people have got used to being at home, and working from home remotely is kind of nice. You know, you don't have to dress up, put a suit and tie on. You can go to the fridge and grab some food when you want. You can take the kids to where they need to go without asking the boss. What it does for productivity is a different question. But in answer to labor, yeah, there's people who don't want to go back to work.
Yeah.
It is a dichotomy, though. It's definitely, there is something going on, because I know down here in Puerto Rico, a restaurant told me he had to raise he was looking for a dishwasher. And I don't mean to be demeaning of menial work, but a dishwasher, he had to raise the wage to $19 an hour to get a dishwasher. I mean, to me, this is just astonishing. So something's going on, and you know, I think it's a mix of all those things you talked about. I don't think we're going to see rates go much higher in the near term anyway, than projections are, than the analyst consensus is. But we're going to see them stay there a lot longer. That's Powell's plan, to see rates stay higher a lot longer. But also, interestingly, there's been a switch from the emphasis, I would say, from April until middle of December, really. It was an exclusive emphasis on raising rates. We heard very little about QT. We heard very little about the Fed selling off their assets in the balance sheet, very little. In the last 6 weeks, that's come to the fore a little bit more. And I think what we're going to see is rates maybe plateau fairly soon, but then we're going to see QT step up. And QT is much more meaningful for markets, for assets, even than interest. The Fed, over its 100+ year lifespan, has given us no reason to be particularly confident of that. You've asked these 8 people sitting around a room on the Open Market Committee to fix the price of the most important price in the economy, the price of money. That has to lead to a certain amount of hubris. And the Fed is always trying to walk a tightrope to fine-tune. And to me, it's an impossible task. It's not that they're doing their task badly. It's just that the task, which they are, is just that the task is impossible.
I want to switch gears here and talk about the anniversary of Brexit. Yes, I'm taking you back in time, Adrian. I know in another life we spoke and covered that extensively. And it coincided with a grim verdict from the IMF. They said that this year, the British economy will do worse than all of the world's major economies, including Russia. Bloomberg Economics estimating that British GDP would be 4% higher had it stayed in the EU. And one more thing I'll add, according to one survey, a clear majority now believe, Britons, that leaving the EU was a bad idea, and almost 2/3 want a future referendum on rejoining. Why do I feel you have a lot to say on this?
Well, I haven't, on that last point, on a majority think it was a bad idea, I haven't seen that survey. I think it's a mistake to blame the state of the British economy or the UK economy solely or even at all on Brexit, frankly. What happened after Brexit, unfortunately, Boris Johnson, with a lot of enthusiasm, started doing the things that were necessary. That was in the trade deals with different countries. The EU remained a thorn in the side of Britain. But then, of course, we got COVID, and, we can say a lot about Boris Johnson, but he just didn't follow through, frankly. He just didn't follow through on what he said he would do and what was necessary to do after Brexit. So I don't think Brexit was a mistake. Believe me, if we were still in Europe, I can guarantee a majority would still be wanting to leave. In Britain, we've never seen ourselves as part of the European continent, and frankly, the Europeans have never been particularly happy with us in Europe. And we just don't like other people telling us what to do. What this does do, if I can, an investment sort of a conclusion from this, there's no question that the UK economy right now is in a pretty poor state.